Hello, hello, good morning. Testing, testing. Hello, hello, good morning. Testing, testing. Alright, sick. I can hear myself. Morning, morning. Alright, let's get this started. I'll wait for 2 minutes, then I'll probably just do a top-down analysis real quick for 9:30 opens. Alright, I'm gonna start going over actually right now. Alright, monthly time frame. Let's go over this. So monthly time frame, we have the opening price of February. We have the manipulation down into discount of this range. Then you can see we have the distribution back up, taking out previous monthly high. And we didn't really take all-time highs. We were like 100, like a few 135 points away. Like realistically, this is not a lot of points. This is not really that much, so we weren't really that far away from taking all-time highs. But we did get that pullback down 2%. And if we go to our weekly time frame, this is our weekly accumulation. So if we are to pull back into the range, then what I'm expecting here is one consolidation or one reversal. So I'm going to bring my equilibrium back up again. So we're going to draw equilibrium of this consolidation range. And what we're basically going to be paying attention to is equilibrium. Because equilibrium is a good target if price is in the accumulation phase. So we have equilibrium, we have previous week low, we have previous week high. So today's Monday, we don't have news. So we could expect a low volume type of day. Not saying that there's not going to be any setups, but the volatility I don't really think is going to be there. But for now, my current draw is previous week low. So daily time frame, pulling back into this consolidation range. So what I'm looking at right now is either price is consolidating, manipulating, and then we could probably have some potential distribution back down like this. So that's my first scenario. Or what we could get is just a pullback down into equilibrium and then expect more of price inside within this range. So one consolidation or simply just one reversal back down. So we close below this daily BISI with displacement being shown from Friday's daily candle. Then we had Monday here. So as of now, I'm bearish for previous week low and this old low here as well. So if this daily failed to offer fair value, simply we're going to look for the external low that created this imbalance. So that's the 4-hour chart. Okay. So 4-hour time frame. We have this 4-hour imbalance. So I drew out these deviations from the swing point high to the swing point low. We tap -2. So we can either expect a retracement back into this 4-hour imbalance, then offering fair value to previous week low, and then this old low as well. So this old low is the low that, so if we draw our, let me see if I can pull up the window right here. All right. So 4-hour time frame, if we draw our 3 months look back, so we have 20, 40, 60 days look back, our swing low that we have taken already have been this low. So we have already taken this low out, and the low that we haven't taken out is this low right here. So this is the most near low. And we also have our previous week high above, and we have this old swing high above as well. So we have so you have 20, 40, and then we have 60. So this is your 3 months look back. We have a swing high at 20, and then we have a swing low at 40. So these two are basically good draws on liquidity. So if you're bullish, this would be a good draw on liquidity. If you're bearish, this would be a good draw on liquidity. Considering that I'm bearish, I'm gonna go with this low and potentially this low as well. But yeah, 4-hour time frame. What we're gonna look for is lower time frame confirmation out of this PD array. We're basically just gonna see if this 4-hour can offer value to previous week low. Because as you can see right now, the 6 a.m. candle hasn't taken this high or this low yet. So we're gonna see if we can either take the low out or it's just gonna remain a inside candle that doesn't take the high or low, meaning that 10 a.m. will likely expand with higher volatility. All right, so we have the hourly time frame. I'm gonna delete this real quick. So hourly time frame, we are trading within the midnight opening price. So we have Asia, London, sweeping both Asia highs and lows. So this could be a nice little seek and destroy day or just range around this area. What I am looking at is time frame alignment. So if we pull our 15-minute time frame, which is this one right here, I'm looking for a 15-minute imbalance to be shown out this 4-hour gap, and then I will look for that 15-minute imbalance to play shorts off. Hourly time frame, I did draw this dealing range from this high and this low Friday's daily print in case we don't want to offer fair value, want to continue grinding up slowly. But if we do end up grinding back slowly up, then we can look for either equilibrium or premium of this range. So I'm gonna go back to the 15. I'm waiting for at least a 15-minute per rally gap to be shown. Because we already tapped this 4-hour imbalance, and then we ran this old swing high again that tapped into this 4-hour imbalance. And this retracement back up, retrace back to premium. Now we're coming back below. So what I'm paying attention to is if we get a body closure below OTE. So this is the 5-minute chart here. So I'm gonna mark out the 6 a.m. opening. All right, we're gonna see what 930 does. We're gonna sit tight and see what 930 does here. All right, we have 930 in play now. We're gonna see if we can create this 15. Not. You have intermediate rebalance here. So 930 swept is low.
Order filled. Target filled.
All right, guys. Sorry, sorry I was quiet, but I can give you guys a quick rundown on this trade I took just now. But here are the profits for this trade. I mean, it was the model was there. So I'm not really a big fan of trading on Mondays, but the model was there and it aligned with my drawn liquidity. So I simply just traded the model just because it aligned with my drawn liquidity. And yeah, so I mean, I was not really expecting a lot of volatility today, especially for a Monday. But yeah, we took out previous week low. I hinted out this morning that I was bearish for previous week low. And yeah, we delivered to previous week low. All right, so I'm gonna give a quick rundown of the trade I took. So I'm gonna take this out real quick. So let's start with the monthly time frame again. So pretty much monthly time frame, we already took out previous monthly highs, so practically we're just having this big pullback. And if we're having some kind of pullback like this, it's either we're gonna consolidate within this range because we only have 4 days left into this monthly candle is pretty much done and a new monthly candle prints. So it's either we consolidate or reverse. So with this reaction, I'm not really that bullish anymore. Going into the weekly time frame, we opened around this area here. We were traced back up. So automatically I was bearish for this low because this is the closest low there is for price to take. And especially after we had this big displacement candle pull back into the range. So daily time frame, also on the weekly, I forgot to hint out, we do have the 0.5 equilibrium level slightly just below previous week low. So that's why I was also more bearish today. So daily time frame, we did have this daily candle open, manipulate. Now we're distributing back taking out previous week low, and we're about to hit equilibrium with that range. 4-hour time frame, I drew out these deviations from the swing high to the swing low. We tapped -2, and we rebalanced this 4-hour SIBI. So practically, this would be your reaccumulation. So whenever price goes to -2, -2.5, and you're gonna expect even more distribution down to -4, then if you find an imbalance or fair value gap after hitting -2, that will be your redistribution, so your second silver bullet zone. So we rebalance this 4-hour SIBI, distributed back down to previous week low, and we're about to tap equilibrium as well. So after the 4-hour time frame, we have the hourly time frame. So I'm gonna go over that real quick as well. So hourly time frame, we had the accumulation. So we had all that accumulation above the midnight. We traded above the midnight, and we're about to tap equilibrium here. But boom, we tap equilibrium now. There we go. All right. So yeah, trade above the midnight opening price. We had this 4-hour imbalance, and practically this is where I started framing my shorts, right? Because I didn't enter my shorts just because there was a 4-hour fair value gap, right? There was time frame alignment logic to it, and I'm about to show you it right now. So the time frame alignment for the 4-hour time frame. So we have the 4-hour, then we have the 15, and then we have the 1 minute. So I'm gonna show you guys this real quick. So this is the time frame alignment that I was using today. So 4-hour imbalance is our 4-hour SIBI above, right? Now, what 15-minute did I use? Well, if you guys look closely, we had these green consecutive up close candles, right? This was the swing high that we put when we stepped into that 4-hour imbalance. What did we do? We swept that old high, so we had a short-term liquidity raid. What did we have up here? We had S&T. So if you guys can see closely, ES does not take this high at 630, but NQ does. NQ takes a high. So we had S&T at these highs. So we have a short-term liquidity raid. We have S&T. And now what do we look for next? We look for a change in the state of delivery. So we had this bearish candle right here next to these consecutive up close candles. This is the bearish candle that comes after these candles, right? So what I pay attention to is the 930. 15-minute candle opened below this black candle. That would be your change in the state of delivery, right? But I didn't enter just off this 15-minute time frame. I scaled down to the 1 minute because remember, time frame alignment. 4-hour, 15, 1 minute. So I looked for a 1 minute confirmation. What was my 1 minute confirmation? A 1 minute CISD. So we had this. You see how 930 open, we had that move all the way up. And then we came back down and had a closure below these two consecutive up close candles. That is what I was looking for. A closure below, price opened, tapped into this last up close candle, and you can see the sell off down to previous week low, and then even more continuation down to hit the 60, which is another one that I marked out. So yeah, you guys can see how I framed my trade what I was looking for today, executed, and yeah, that's ideally what I was looking for today, and it delivered kind of perfectly. Like, I know it continued lower. Yes, I could have made more money, but I'm fine with the trade I took because as long as I follow my rules, as long as I follow my pre-market game plan, that's all that matters, right? But yeah, today was mostly just time frame alignment. I saw the setup, I took it, and yeah. We also had a re-entry as well. If I didn't get that entry above, we had this 5-minute gap right here. So I could have probably entered off that 5-minute gap with this 1-minute candle closure below this inversion. So enter right here, stop at the high, and then probably target or add in. I didn't decide to add in. I just let the trade pan out. But if I missed the entry up here, then definitely would have entered at this other entry model, which is that 5-minute gap, 1-minute inversion. But honestly, this is a pretty clean day for a Monday. I mean, accumulation, expansion down to IPTA 60. And if you guys don't know what IPTA 60 is, I'm about to show you what IPTA 60 is. So I went over IPTA 60 earlier in the live stream, but IPTA 60 pretty much is the last 3 months. Last 3 months, right? Why is it doing this? I don't know. All right. So IPTA 60 is the last 3 months. We have 20 days look back, 40 days look back, and we have 60 days look back. Now, if we opened around this area, so I'm gonna make this black so it's more visible. So if we open around this area, we have this swing high and we have this swing low. So these two are the most closest liquidity points for price to go for. And if I'm bearish for the day, this old low is the most high probability target for me because it aligns with me being bearish. Because we have 20, 40, 60. So I used IPTA 40. I'm not bullish anymore, so I didn't really want to look for long. So if I'm looking for shorts, this is the closest one. If I'm swinging, then I'll probably look for IPTA 60, which is this low if I'm swinging. But yeah. So I just went over IPTA. And then I'm going to take this out. And yeah, you can see how it delivered perfectly to that liquidity point. So yeah, I'm probably going to wrap the live stream now. I'm going to go hit the gym, do some other work. But yeah, so it's a pretty quick live stream. So probably catch you guys tomorrow on the live stream. I am going to stream tomorrow. The week just started. So yeah, catch you guys later. Have a good day. Don't be safe. Don't do dumb stuff. And yeah.